Hello and welcome to part 5 of our video series, Avoiding the Pitfalls when Completing College Financial Aid Applications. Make sure that they're accurate and on time. My name is Matt Heisey. I am owner of the College Funding Connection. And if you're not familiar with our company, our contact information is just below here. We are headquartered in Brunswick, Ohio. We work on a national level with families all across the country. And our contact information below that, our website is collegefc.com. Today we're going to be talking primarily about need-based financial aid in the application process. When we talk about financial aid, and you hopefully have seen some of our other videos we have on YouTube and elsewhere, but we go into a lot more detail about the numbers. Today I want to focus more on deadlines and schedules. But the foundation for effective planning is that EFC number, the expected family contribution number. You're probably going to hear that over and over again if you're researching the college planning process. But quite simply, that's the portion of your income and assets that you'll be expected to contribute towards the cost of college. So that's quite literally your out-of-pocket expense, ultimately. And it's determined with a couple different formulas. We have FAFSA, which is through the Department of Education. Pretty much every school is going to require that. And then you have CSS Profile and Registration. We abbreviate it as Profiles. And that's used by a lot of private colleges, about 300 schools across the country. And it's based on the time period from January of your junior year of high school to December of your senior year. And then it has to be completed each and every year thereafter through undergraduate years for college. And that's known as your base year initially. And then each year they reevaluate your finances to see what you're eligible for the subsequent school year. So it is repeatable, and that's why planning early is so important so that you get off on the right foot. So ultimately, you come up with a financial need number. And the financial need then is equal to the cost of attendance, let's just call it the retail or sticker price on the school, minus your family's expected family contribution. So we've talked in the past about how some schools cover 100% of aid, some cover very little. So that's kind of the early part of the planning process. But once you have a handle on the colleges that you want to apply to, then you want to make sure that you get those applications submitted accurately and on time, and we're trying to maximize that financial need number. I'm often asked, hey Matt, what assets count, which ones don't? And quite simply, everything is asked about, either by the public school or a private school, but it doesn't mean everything counts. So we see a checklist of many different items here on the left. You have checking savings accounts, savings bonds, stocks, 529 plans, you name it. So we know that they're asking about a lot of information, a lot of financial information, personal information about your finances. And that's for the FAFSA. And then when we look at the institutional formula, CSS Profile and Registration, it gets into even more details. If you're self-employed, they'll ask about your business and all kinds of things. So you want to have a really good handle on which assets are counting and which ones may be counted more than others as you're getting closer to that financial aid application period. So good planning happens early, and we'll talk about that here in just a minute. So with the FAFSA, we need to understand a few things. First of all, many applications that are submitted by families contain errors. I've heard some really high claims. I've never really been able to verify the numbers, but some people say as many as 70% or more of the applications that families submit have errors on them that have a negative impact on their financial aid eligibility. So usually it's due to misunderstanding the questions on the application. So if you don't understand them, make sure you check with somebody that understands them better than you do, and hopefully get a straight answer on some of those questions. The second point, get your taxes done early. I know it's hard sometimes, especially if you're self-employed, but you want to get those taxes completed and submitted early so that you have the numbers ready when it comes time to submit your financial aid applications. And this kind of gets into the next point, which is a lot of the financial aid, especially at private schools, is distributed on a first-come, first-served basis. So if the private schools are giving away money through the form of grants or scholarships, if you wait till the last minute or too late to get applications in, there may be financial aid, but you may not get as much free money from the school because at some point they cut it off for that school year and then they wait till the next school year. Complete the FAFSA even if you don't think you'll qualify for aid. You may be surprised. I've seen a lot of families that didn't think they were going to get anything, and then they did after they submitted the FAFSA, and they were pretty surprised by it. So do it. Some schools require it even for merit aid. So good just to get it in there, see what happens. Worst case scenario, they say no, but you may be surprised and there may be some financial aid there for your student. So if you are a sophomore and sophomore parents, prepare now for your base year. And remember, I just said that the base year starts in January of the junior year of high school. So if you're a sophomore, a year prior, it takes usually a good 4, 6 months, sometimes a year, to put together a good plan for college, a good financial plan for college. So the earlier you can start, the more time you have to plan. You're getting pretty close. You're in the 10th, 11th hour at that point. So if anybody tells you it's too early to start planning if you have a sophomore in high school, I will tell you, frankly, they don't know what they're talking about. So don't accept that kind of advice because it's just not accurate. Your base year will begin in January of your junior year of high school, and then it ends in December of your senior year of high school. So you want to make sure you get that planning in prior to that time if you can. And then remember, and this is a very important point, how you structure your income and assets now will determine your expected family contribution and help you reduce the amount that you will pay out of pocket for college. So early planning is so important, and make sure that you structure the income and structure your assets especially to maximize financial aid. If you're a junior or a parent of a junior, your base year again starts in January, goes through December of the senior year. Don't procrastinate. Remember, there's no do-overs with this process. If you wait too long and there's information that you have to legally report on the FAFSA, it's then too late. You certainly don't want to lie on the applications. That's a big no-no. So start early so that you can list the information that you need to on the financial aid application, but try to optimize your finances so you're not having to pay too much for financial aid. And again, how you structure income and assets can make a big difference. So understand that prior to submitting the financial aid application, and understand the schedules and understand the deadlines that are required by every school. If you're a senior, it's FAFSA time. So remember that the FAFSAs normally have to be submitted by February of your senior year of high school, leading up to that fall semester when you get into college. So the colleges will be looking at your finances during that period, and ultimately sometime around May or June of your senior year of high school, sometimes a little bit earlier, they'll be, if you're accepted to the school, they'll be providing you with an award letter. So make sure you understand those deadlines, make sure you get it in on time. And for parents and students' income, they're looking at that, again, during that base year, which is the most recent tax year during your junior and senior year. And then if you have assets in place at that time, they're going to look at anything that is on the radar screen the day that you complete the FAFSA. So any planning that you would do with savings accounts or any assets that you have that are showing up there, you want to make sure you do that prior to submitting the FAFSA. So one of the big questions I get is, should I seek professional guidance or assistance? And it's hard to know, but there are some guidelines that we've put together. One item is home ownership. So if you do own a home and you've paid your house off early, maybe you inherited real estate from a family member and you're living there, even though it may be your primary residence, it can sometimes count, especially for private institutions, private colleges. So you want to understand that and understand how much that might have an impact. If you have a household income range from $60,000 to $200,000, it's very possible and even likely that you're going to qualify for financial aid, especially at private colleges or universities. So you want to make sure you look at that and see. If you don't understand it, make sure you talk to someone and try to get some ballpark numbers for financial aid eligibility. If you have savings in excess of $30,000, especially if it's more liquid savings, then you definitely want to look at that or talk to someone to see what kind of impact it may or may not have on your financial aid eligibility. Now keep in mind, I'm talking about student assets and income and parent income and assets and income. Your student is attached to you all through college, their undergraduate college experience. So if it's in mom and dad's name or the student's name, you still have to look at it. If you have a student with a grade point average of 3.0 or higher, then you should talk to someone or at least investigate this to see if there's any possibilities for merit scholarships. Now, it doesn't mean if you have a grade point average below 3.0, you're not going to qualify for merit aid, but your chances are much higher if you have a grade point average above 3.0. It also depends on SAT and ACT scores, so this is just one variable, but it's a good guideline to look at and kind of go from there. So if your family does meet one or more of these guidelines, then I would consider professional assistance to discuss your family's options. Doesn't mean you're paying a professional. In fact, most reputable professionals, ethical professionals, will provide an initial free consultation for you, because at that point they don't know if they can help you. And if they're being honest and if they can't help you, then they should tell you. That's what our company does, and hopefully there's others out there that do that. But at least you'll know at that point, and at most it's going to cost you maybe a half an hour to an hour of your time, but it's time well spent, and you're talking to somebody that probably has years of experience more than you do. So consider that, again, if your family meets one or more of these guidelines. A couple action items for you today. First of all, position your assets properly so that you qualify for the most need-based aid possible. This does not mean that all savings is bad. So saving is good, but where you save the money can make a big difference. And if you don't understand the rules and what counts and what doesn't, then make sure you talk to someone that does. Number two, be mindful of the financial aid filing deadlines. Remember, there are no do-overs. So there's going to be deadlines for FAFSA, deadlines for profiles, and then some private institutions actually have their own private financial aid applications you have to fill out as well. So you want to make sure you know when those are due and you don't miss the deadlines, because you can lose out on financial aid, especially the free money that some of the private schools are offering. So if you are interested in learning more about financial aid, understanding how it may or may not impact your family, and see what the rules might mean for you, feel free to contact us. Here's our contact information, collegefc.com. Again, we have a contact us page there. You can fill in your information. Somebody will get in touch with you. Or here's our toll-free number. Just give us a call. Be happy to talk with you on the phone. We can schedule a time to meet. It's 866-305-2321. We have another piece of information that you might be interested in. We have a lot of giveaways through our website. We change them periodically. One that we have up right now is the Student Roadmaps to Success. This is a free report, so it doesn't cost you anything to sign up. You do have to opt in to receive it for privacy reasons, but you can download it then, and then you can also get on our newsletter list. Our newsletter is called Planning News. A lot of good free information there, useful information for your family and for the student in your home. You can, again, visit our website at collegefc.com. The direct link to the opt-in page is collegefc.com/newsletter, and that'll take you right to that page. So thanks again for joining us for this video. Stay tuned for part 6 in our series. Again, we have a 7-part series, so we have a couple more coming up. And on part 6, we'll be looking at what kinds of tax aid is available for parents and or students. So I hope you can join us for that video as well. And until then, good luck with your college plans.